Good morning. It's November 5th. It's the Watch List Wednesday from Invest with Rules. I'm Scott Bennett with the great Mike Olafson. Mike, welcome to today's video. Let's dive into the agenda and why don't you cover this quote and what we're looking at?
Yeah, so we did this last week, kind of liked it, so we just decided to do it again. Here is a nice dusk snapshot of the Supreme Court building. And the Supreme Court is taking up the case of the Trump administration tariffs today. Could be really market moving, so we'll see what ends up happening. We'll talk a little bit more about that as we get into the markets. And then the quote is talking about the difficulty of sell rules where, buying is kind of almost the easy part for a lot of folks. It's when do you sell? And it's been a common theme as we've been talking to clients and members over the last few weeks. Now that the market's kind of getting a little shaky and people are starting to get stop losses hit or wanting to look to sell, what rules do you use? And it's one of the things I love about what we do is we've got a set of rules. It's clear, we follow them, remove the emotion. So, with all that, what say you, or do you want to just dive right in?
Let's do it. So before we dive in, world's quickest disclosure. This is just information, not a direct solicitation to go buy or sell anything. Please always manage your plan. Manage your risk. You know the dance. We're going to start with the market. So as of this morning, Wednesday, November 5th, the market is a 9 out of 10. It's been wavering between 8 and 9. It's this morning we're at a 9 as we're seeing some stability. So the short term is up, meaning roughly about 30 days. The long term is up. And we've definitely seen a little bit of a pullback. So you've seen the US dollar increase, and this has been pulling back some risk assets. And this is a market surge chart that we've snapshotted. The green line is the 21-day exponential moving average. The red line is the 50-day simple, and the black line is the 200-day simple. And you're sitting on the 21 EMA. You're sitting on the, I would say, the now support. What was resistance is now support, and you're filling in these gaps that happened. And overall, the market is under some pressure, but the market is still in a strong uptrend. Mike, what say you? Any other comments?
Yeah, the only thing I'll add is, we don't often look at volume, but it's kind of telling that some of you look at the bottom of the chart, you got blue bars and pink bars for volume. Pink is a down day, blue is an up day, and you've got several pink bars, which is a little concerning.
Yeah, and obviously we're lacking a lot of government financial data that comes to us, but we've seen some jobs numbers come in a little bit on the weaker side, which is to be expected, and we're now learning the word AI washing. So is the reality of people using AI can replace some other people's jobs, which is a really hard phenomenon of what's happening in today's world. So we're roughly exposed 74.5%. And our beta is zero point 0.8, so a beta of 1 equals the market, so we're taking some risk off. And our portfolio heat, we're watching that closely. So if everything hit our trailing stops, negative 3.5, it's been a volatile couple days to say the least. That pullback hasn't been very fun. And then if we go under the hood with the market gauges, the mega cap techs continue to hold their supreme reign, and gold is now coming, kind of staying off to the right as much as there's been a pullback in gold. That's been doing well. And I would say the other things that stand out to me are healthcare. That's really interesting given the kind of that dynamic, how that's off to the far right. Energy's moving to the right. Financials are moving to the right. Bitcoin having a decent day today, but that's been really hit hard. Materials hit hard. Real estate hit hard. Anything you'd add on that or the mega cap exposure down below?
No, no, I think you summed it up nicely.
Cool. So you're still seeing a lot of green and yellows. There's a lot more pinks or red showing up. So there's breaks happening. So that's where some of the risk is happening. Meta's under pressure. MasterCard, Visa are under pressure. So we'll see, can the financial sector hold up, or this is just a kind of a bounce today, sort of, or is this going to roll over? Sorry for the blurry chart, but I saw this on the I think it was on YouTube. This is from Worth Charting. I thought this was really interesting to share with you. It kind of cracks under the surface. And the S&P 500 is about 1% away from its 52-week high. So the S&P 500, which is market cap weighted by how big a company is is doing really well. But if you go underneath the surface, it's pretty rough out there. So what's really interesting is there are about a third of stocks that are now down 20% or more from their 52-week high. So if you take the 500 and you kind of go to the middle, you go to the mean, the median, they're down almost 15 to 16% from their 52 weeks highs. So what's happening is you're getting a lot of deterioration that you're not really seeing in the S&P 500. So then the question beholds is, does this underneath problem, this breadth issue, does it hit the large cap techs at some point? Or can it reverts where the smaller companies in the S&P 500 do better? And so far, while we're looking at things, it's that's why we follow the trend. The answer is we don't know yet, but there's definitely a lot of issues under the surface. So we'll keep rolling. And Mike, what do you got?
What, Scott, I gotta say, I love this. Something like this, if we can make it almost like, once a month or so, we should look at this because this really tells us in data what many of us are feeling in our portfolios. Where, hey, how's the S&P almost at a record high, but yet I just took a haircut. So this really sums it up. I love this. Thanks for including it.
Yeah, and you'll see we have a half position on small caps right now. And if you think about the Russell 2000, that there's some companies will eventually grow and become a mid cap. And the mid cap is kind of you've made it, you've handled your growth and your debt well, and then eventually you grow and you get to the S&P 500, if that's the case, or you deteriorate. So you're seeing a really interesting phenomenon where mid caps and small caps are still underperforming. There was a moment of truth where the small caps were showing some signs of life. Can they come back, or is this really the large cap behemoth forever, and then eventually that rolls over? So we're watching and we're waiting. So, at our process at Invest with Rules, we follow the big money, we follow the trend. We're going to go through our mechanism and process. And again, I'm going to share this video out there. So, if you like this, definitely give it a quick subscribe. Our YouTube channel is small but mighty. And very simply, members get absolutely everything. So, we're going to look for liquidity. So, we have this massive list of stocks. We cut it for liquidity, we cut it for fund accumulation. We're getting data monthly and we're cutting through billion-dollar fund managers' buys. And what we're doing is we're looking again for earnings growth. We want to see at least a projected 10% earnings growth. And then from there, we're looking at volatility adjusted momentum for how do we rank them. So, how do we do it based upon its performance and volatility? And then we move it through our trend roadmap analysis, which is simply based on trend and math. So where is it in its trend? Is it in an advancing phase on a gas signal? Is it in an overheat? Is it on a coast? And then we are able to identify some areas to invest in. So I'm going to start with the top 10. Members get all of it. And the movements, we re-rank this daily. The cut happens monthly. So this is fresh every day for members. And what you're seeing here are stocks that have made it through our cut. And there's roughly 100 stocks, and this is the top 10 as of this morning. So you'll see in gray, we actually own it. So Micron has been a rocket ship, which has been really fun, still on a gas signal. And then you'll see a couple other overheats are showing up. And you'll see as there's infrastructure plays in the United States around water, we have a position on Ferguson. But you can kind of see how year to date these stocks have been just spectacular and they keep doing really well. And today's another good day. Mike, anything you'd add on this top 10 from the brand new November cut daily updated?
Yeah, and I think you covered it. The only thing I'd add is you look at the coast signals and the brake signals, and yeah, there you go. You're pointing to them. They're creeping up, which I think goes right back into what we've been talking about the market and what might be going on underneath the surface.
And then we're going to share with you our top 10 from our ETF list. Mike, what does this say to you?
All right, so super interesting. You've got, and by the way, the top 10 for ETF list works just like the billion-dollar fund manager. We re-rank it daily right at the last couple hours of the trading day. And what do you have here? You've got, oh, one of our new entrants, by the way, CoinShares Bitcoin Mining ETF WGMI is a new entrant for us on this list. We got it from a great member suggestion. And here you go. It's at the top of the list. You got semiconductors, both semiconductor ETFs right at the top of the list. We own one of them. Anything in gray, we own. And so overall, this top 10 is really doing well. But I will point out, Scott, that same kind of phenomenon is happening where you look at this list of roughly 82, 83 ETFs, members have access to the full list. You'll see that the coasts and breaks are kind of creeping up a wee bit, kind of like what we're seeing with the billion-dollar fund manager list. What else would you add?
No, that's awesome. And then from there, we filter it one more time. And this is what we share on our live sheet every single day. And very simply, what we're going to do is go through the charts. And what you're looking at here are the top five ranked stocks on gas, the top five ETFs that are on gas, and then if there's any new signal changes. And this can update throughout the day. And we're doing an additional cut. So very simply, we are only looking at gas signals. We want to make sure there's kind of confirmation that there's further momentum in this position, and then it's really a risk cut. So if it's already skyrocketed up and out and the risk is too great from our what we call a short-term risk unit, then it wouldn't make this list. So to me, what stands out so far is this isn't really pretty. So you're seeing discount retail, you're seeing real estate, you're seeing some financials that have been beaten up, and you're seeing international solar healthcare energy. So to me, this looks not like your Mag 7 semiconductor list. This looks like a diversified spread. So it's kind of moving up and out into something else. So that's kind of interesting to me. And I'm
Yep.
going to cover Dollar Tree and I'll move over. So Dollar Tree is ranked number 19 as of this morning. Again, we'll re-rank that later today. Short-term, long-term uptrend. Earnings are on November 25th, so we have some time. You can see that it had a pretty nasty gap down, and you've kind of went all the way down to the 200-day simple, and you're making your recovery. I know this looks kind of nasty, but it did go from 61 in April at the low all the way to 118. And this is roughly your retracement. So could you maybe form some sort of I know it's kind of sloppy and it's big gap down, but could you form some sort of a base where then you fill this gap and then you kind of make your run back up to 120? And if inflation is there and people are looking for more diversified shopping where you get your dollar works harder, here's your Dollar Tree, and this is what the funds are going after. Mike, any thoughts or move to the next one?
I think the only thing I'll say is if you happen to be an IBDer, you love Investors Business Daily, Market Surge, the charts and the automated patterns that they show, you could see that 22 days ago when we flashed the latest gas signal with the trend roadmap, it was right at the low part of this latest consolidation range that Market Surge is showing. Fascinating how we brought this up several times over the past couple of months that the trend roadmap can sometimes be that early cheat to get you in with a low risk setup on a market surge chart using that bottom of the range as your stop. So kind of interesting.
Cool. And then why don't you go through Well Tower?
Welltower is a healthcare related real estate company. We've actually this has been on the billion-dollar fund manager list on and off for, geez, if memory serves, a couple of years now. And you can see what's happened. It's in a clear gas. By the way, this did become overheat as we were setting up this deck. So normally an overheat is not going to hit our watch list. So this may not be on the watch list when you're actually looking at the live sheet because of the overheat status. Overheat being RSI over 68. But clearly, if you've been in Well Tower for what, almost 3 years now, you've got 150% return. The long-term trend has just been super solid. The short-term trend 21 days ago that came around to give it that latest gas signal, once again, it was kind of like yeah, exactly. You're kind of in that below the buy area, the blue market surge buy area, and it gave you that kind of early entry. And look, you've got an 8+% gain. What else would you add, Scott?
Yeah, and the market surge chart would show that you're a bit extended, and then we also agree as of this morning. Moody's has been having some trouble. So Moody's is on a day two, so this would be day three at the end of the day, of a short-term and a long-term uptrend. So It's just coming back. So it's had a base, a failure, and a double bottom, and it's still moving sideways. And you probably washed out most of the people. So short-term, long-term uptrend 2 days ago. So it would be right in here. It was just saying, hey, you know what? If you're going to take a starter position with managed risk, this is your low cheat. It's right here. And can it, I know it's below the 50 and it's hit its head, but there's a higher probability you can see the volume coming in that could it pop above and get back up to the magical $500 range for Moody's. And it has double digit earnings and it's in the gone nowhere department of the financial sector. So that's where the funds have been accumulating. And obviously, it had a pretty nasty high volume bar over here, and it's washed people out again. So it's kind of a slower mover, but one that hit our watch list. And then we'll go, Mike, any thoughts on, we went to Dollar Tree, now we're going to Ollie's.
Yeah, Ollie's, we've it's been around the billion dollar fund manager list for a while. We've talked about it several times, kind of done the Peter Lynch view of it. I've been there. It's a super interesting store. If you haven't been to an Ollie's, kind of interesting, especially if you've got any kind of shopper gene in you that you really like to shop. But as far as what this has been doing, this is day one, the first day of the latest gas signal. The long-term trend's been in place for a year and a half now with a 74% return. And you can kind of see, it's interesting in this 1 year chart, you can see how it's kind of climbed the 200-day moving average. And it's like sat on, in fact, I can't even count the number of times it's touched it. And there you go, where you're pointing, it closed slightly below it, but it's still kind of in the range of the 200-day. And this new gas signal could be once again that early cheat for a low risk entry if you were so inclined. Because what you could do is you could come into it and use the bottom of that range or the bottom of the close of what last week basically as your risk setup. And if I'm eyeballing it, it's probably rough. It's certainly less than 10%. Yeah, I think it's probably like in the 6, 7% range. But anyway, what would you add?
Yeah, I mean, let's say hypothetically this was something that you were eyeballing and it hit our list back in November of last year, and you put your position on somewhere over here, and you'd still be in it. And you'd be in a discount retailer outpacing the market, which is kind of interesting.
Yep.
So that's Ollie's. So that's those are the billion dollar fund manager rank. We also rank the ETFs, but solar has been solar hot. So short-term, long-term uptrend. It's interesting. We actually have a position for some clients in full disclosure, but you'll see that it's a massive cup. It had its handle, it did one little shakeout and retest, and it's back. And solar's an interesting phenomenon where if you zoom back on a longer term chart, it's done awful the last several years. And in Trump term one, it did really well. And who knows, Trump term two, maybe this might work for us. So short term has been going for 82 days, up 27%, which is phenomenal. That was all the way back on August 15th. So you had this gap up area. So right at the first hello. And I know it seems like it's in this extension phase, but there are many times where it's just been riding the 21-day EMA and it still is doing it. And today is another example where yesterday was painful and today is another blasting up day. So this is if you're like momentum, this is your play. Solar stocks look really interesting. Mike, any thoughts on solar or we'll go to Brazil?
No, we keep moving.
EWZ, what do you think about Brazil on a breakout today?
So this is clearly in a classical breakout. As far as the trend roadmap is concerned and a gas signal, the long-term trend has been in place since early August, up 18%. And the short-term trend, we're into week three, up 5%. You can see once again a little bit of an early cheat within that range. And it's clearly in the market surge buy zone. Now, I guess, Scott, what's your opinion on this? This you could argue this is a classic breakout, and we've seen a lot of classic breakouts, not necessarily working of late. What's your take on this? Is this extended, or you think it's a good breakout area?
It's I would say today's probably your day. If it runs a little bit higher, then I'd be more cautious.
Yeah.
But since you're in the
Yeah.
lower part of the breakout, again, what we like to do is do multiple type buys typically. So let's say you do instead of one large binary decision, you did like half, and that way it's not as painful if it does fail. So, but I would say that's something where you can just keep your risk tight. So again, nothing's perfect, but this is a diversified ETF of Brazilian stocks, and obviously there's always geopolitical
Oh yeah.
risk as well. There's definitely a turn happening in healthcare. So a lot of the insurance providers got absolutely punished, like United Health Group and a few others, but you're definitely formed a bottom, and you're now back over the 200-day simple, and you're chopping around. And 30 days ago, you got your signals at the end of September, early October, and here's where the signals first hit, and they're not that extended. So could you then make a run for that 150 mark? The trend is telling us it's possible, but the healthcare ETF has been terrible for a long time, and it's come to a more defensive attack on the market. So we're definitely paying attention. Any thoughts on healthcare, or we'll go to equal weight energy next?
Yeah, just the thing that jumps out at me looking at XLV is over the last 90 days, you got the classic higher highs and higher lows. So if you're a pure chartist, it's kind of as sloppy as it is, they're there. So I think what Scott said holds, where could he get up to that 150 level or above? Certainly could. We'll see.
And this has just been stuck in a range for a long time. But so the XLE is pretty much Exxon and Chevron, but the equal weighted energy is more spread out. Any thoughts on RSPG, equal weighted energy ETF?
This is just another one of those massive consolidations. You look at this 1 year chart. In fact, yeah. Oh, in fact, I just noticed Market Surge is showing it as just a massive, massive consolidation, flat base. So, if you kind of believe in the thesis as to what's going on, this could be a nice little early entry to go in, low risk entry. But personally, I kind of want to see a bit more action. I don't like when we have a gas signal and the short-term uptrends you already got at a little bit of a loss. What do you think?
One thing that we've been looking at was the ticker symbol PDBC, which is a
Yeah.
commodity non-K1 where it physically owns energy or oil. And that one looks a little bit better than those that dig it out of the ground or transport it or refine it. So far, but this is an area where you could see a rotation here in a defensive situation. So it's definitely on our radar, and we don't own it, this particular ticker, but we're watching it. So we're going to wrap it there. So first, thanks for joining us on the watch list. I hope this was helpful in part of your process for your watch list. But if you're interested in becoming a Invest with Rules, if you're a self-directed investor, just reach out to us, hello@investwithrules.com. We're here for you. We care. We want you to do really well and certainly manage risk. And if you're like, this is amazing, but I just have zero time and I could really use oversight, but I got no time, then that's where, if you just want to check out IWR Advisors, it's a totally separate business, similar research arm, hello@IWRadvisors.com. Mike, any final words on Watchlist Wednesday? Thank you so much, and after you.
Yeah, just thank you for watching. Hopefully, you got some good stuff out of this. And please, no matter what you do, please have rules and follow them. So if you struggle with selling, for example, going back to our quote and the very first slide of the time here, please just have your rules, follow them, be consistent, and you'll find over time you'll be in a lot better state of mind, taking the emotion and opinion out of it. But regardless, best of luck, and we'll talk to you on Friday.
Love it. All right, let's stop it there. Trade well. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.